In market news now, global markets stumbled as signs that the economic outlook is weakening, leading to caution. European stocks fell, pulling away from yesterday's one-month highs, and U.S. equity futures dipped, with markets in Japan down 1.6%. Weak U.S. economic data this week has exacerbated recession worries, taking the edge off recent stock market gains. Interest rate futures have rallied strongly in recent weeks as traders bet that turmoil in the banking sector will tighten up on lending anyway and save the need for the Federal Reserve to do the job. Meanwhile, locally, technology group EOH reported an interim loss as a result of higher operating costs and taxes. The company, which is valued at 1.1 billion rand on the JSE, posted a loss of 5.3 million rand. EOH's management team has been salvaging the company's reputation after allegations of malpractice and tender irregularities under the previous leadership. To talk to us about the latest when it comes to the markets, we're joined by Carmen Belwana from Sanlam Investments. Carmen, thank you so much for your time. How are you assessing global and local market sentiment so far?
So I think the big news for today has been around the New Zealand and Australian central bank shock. The increase in the interest rate there was more than the market had been expected. And so we saw a reaction across the globe to the negative. The implication here is that they do see that more pain for longer, number one, and we've seen a read-through in terms of the market sentiment that concerns around recession have increased once again. We've seen gold exceed the $2,000 a mark and testing its previous peak as well. So largely, it seems to be a risk-off today, and we're seeing that in the JSE, which is also down.
We've just wrapped up the first quarter, and when you look at local stocks, how have they kicked off the month of April for you?
Yeah, so it's a little bit unfair because towards the end of last week and the end of the quarter, we did see a negative reaction, a fallout on the JSE post the SABC surprise with that 50 bips hike. Having said that, the week initially started on a positive note and we saw some clawback and recovery. However, as I've mentioned, the story of the day has led to a negative reaction by the JSE and largely concerns around not whether we'll have a recession, but I think the extent of the recession at this point.
On that note then, when you look at the broader picture, what do you think will be the driving force for equities? Will it be recession fears and, I suppose, prolonged interest rate hikes?
That's absolutely going to be the theme. I think that we've largely accepted that we are going to see a softening in the economy. It's just about what the depth of that will be, whether it will be a soft landing or worse than that. And as you've mentioned, if inflation numbers continue to surprise to the downside, we're likely to see higher interest rates for longer. So that's definitely going to be a key theme. We've seen the rand recover slightly over the last week and the last few days, but again, that's also quite volatile at the moment.
So yesterday we had the JOLTS data, also known as the Job Openings and Labor Turnover Survey. Given some of the numbers that are coming through on that front when it comes to this, I mean, can this be framed as good news in the lead up to the US jobs reports on Friday?
So we would hope so. The theme is a decrease in that number that came out. Having said that, at that 9.93 million level of job openings, it still remains significantly elevated compared to pre-pandemic levels, which we average at about 7 million. So just to give an indication of how far we're still off from pre-pandemic levels. Having said that, and as you've mentioned, if the initial jobless claims numbers that come out tomorrow and then the non-farm payroll on Friday tie in with the trend here, what that does indicate to us is that the Fed then has the ability to say that what they have been doing seems to be having an impact, which is slowing down the economy. And so therefore we might see that they ease up on the tightening cycles. I think that's the only silver lining that we can gather from this.
We're also going to be getting into U.S. earnings season. Given the picture that we saw, in the previous quarter, what are you expecting as we go into this one?
Yeah, so again, I think we're going to be looking and going to be focused on margin direction. The key concern or the expectation is that we're likely to see a decline in margins, so margin compression is likely to come through. Add on to that, in the last earnings season, a lot of management bodies, I think about 81 of the S&P 500 companies had come out and either downgraded earnings or given a guidance on negative sentiment, which is quite high and elevated, but that's your general direction. But it's what we expect. If we do see the U.S. economy slow down, we are expecting to see a softening in earnings going forward, and that's likely to be the key theme for the U.S. earnings season.
On that case, then, what is the House view then, I suppose, at Sanlam Investments when it comes to that recession fears and that global slowdown? Is that still on the picture, or have you moved it further out to probably later on in the year?
If we had a globe to guesstimate these things, it would be amazing. But the approach is to do it with caution, keeping in mind that, we look at worst case scenario, base case and best case. But I think the best case at this point is to say that recession is inevitable, and how do we position ourselves to ensure we protect our portfolios and our returns.
All right, Carmen, let's leave it there. Thank you so much for your time. That is Carmen Belwana from Sanlam Investments. And as we mentioned that on Friday, we do have the U.S. jobs report figure, which is expected to come out. However, on Friday, it is Good Friday. But nonetheless, what we will be doing is outlining tomorrow the kind of expectations and the kind of figures that we should be looking out for. And the market will, I suppose, digest all of that news on Tuesday when we do reopen and a lot of the US markets as well as the local markets come back online. But we'll have all that for you tomorrow. That is it for me. We're going to take a quick break. When we come back, we'll have more news for you.